So in this video, I'm gonna tell you why I think Bitcoin is bullish for midterm. And when I say midterm, is for me is around weeks and even months. I think around 2 months. The fastest one month. Well, I talk a lot about doing this kind of video because it's gonna be quite long, but I try my best to do it as quickly as possible, because you know it's like sometimes in order to give everything it's gonna take time, and sometimes it's really hard to. But yeah, this video is not financial advice, so please don't do anything stupid. This analysis is for educational and entertainment purpose. Alright, let's get started. So I can hide the execution, the position. Well, I actually have the order in my live account, and in the paper account. Here is a paper account. I may update the status of this kind of profit slot, whatever, in the future, in the new video, or just in the comment. But basically, you know my stop loss, you know my take profit target, you actually know exactly when I'm gonna make money or I'm gonna lose money. I post it on Twitter, I'm gonna post it on a community tab of YouTube as well. So, okay, let's get started. Here is the mitigation block on quickly chart. And I'm gonna using the fit to find the mean threshold. What is the mean threshold? It basically just the 50% level of this candle, this mitigation block candle. Well, so I'm gonna name this one is mitigation block mean threshold. Quickly. All right, here on daily, now I'm gonna share with you this one. In this mitigation block, we actually have a daily low right here. I'm gonna make it green. All right, and here's well, let's analyze this one. So my model, I'm gonna tell you my model right now, so you have an idea of what's really happening. All right, here I usually find a point of interest. Well, this one is my point of interest, the mitigation block, and when price go there, I buy. No, not really. I'm gonna wait for like a response, and then price gonna form something. Let's say a BOS, and when price go back into the zone, the fit, I'm gonna just long and using the lower end of this point of interest at my stop loss, and the take profit, it depends on the market. I mean, I need to see the candle, the pattern, to the liquidity to determine, but at least it's 1 to 2 or better, it depends. But here's the thing, in this case we have the mitigation block right here. So the first time it come into the mitigation block, you can see right here, it rally right into the value gap right here, and then it just go down again, and right here for me this candle, and it actually feeling this, it come to what I care, that it actually come to the point of interest where I actually waiting. So on daily time frame, I actually seeing it forming right here. The first is another block right here. And for me, this order block right here, it take count this low, so it's really something I can trust, because an order block is good, but an order block that actually take count the short-term low is even better. And look at this. There is a mean threshold of the daily always mean threshold, and just looking how price actually respecting it and then sending higher. What's really beautiful is that it's not only it respecting the daily order block mean threshold, but it actually close two candle closing above this green line. And what is this green line? I just told you on that is the major daily low. So let's note down. This is major daily low, and when price respecting this major daily low, for me it actually reclaiming something and then sending price higher, and then it displacement and take count this short-term low. But after taking out this short-term low, price actually going higher into this fair value gap, and it filling halfway, and then price go lower. But seeing this, price actually go lower, but it failed to make a new low, and it actually respecting this daily order block as well. This one is another order block creating by take out this low. Not really, but this low, yes. So when price actually respecting the bullish order block, and why the trading model that I just showed you, Harvard's POS right here, price take out this high, short-term high. So when price check out this short-term high and go back to a discount level right here, is where I consider a long entry. So I consider a long entry right here. I think somewhere around here. Well, and stop loss, it's gonna be around below. I think about 1,000 pip. Yeah, and for me it cover the whole body of the order block. It covers the daily order block mean threshold. It covers the major daily low right here, and it covers this low as well. So for me that's basically a good stop loss. And very first thing I am actually seeing is price gonna go there, this fair value gap, and how price gonna react. Gonna determine how I'm gonna close the trade, because let's see this. So after price displacement right here, you can see that how price come into this fair value gap, halfway fill, and then displacement really strong, and then it retraces again, coming back into this fair value gap, filling halfway, displacement, create new lows again. And you're gonna see this happening again right here. Price never go into this fair value gap, but here it did, and then displacements again. So for the past, let's say 6 months, for the whole 6 months, fair value gap working and sending price really deep. So this That's the reason why this value gap right here. If price go there, let's say price go here and then go like this, I'm gonna call my trade half and maybe moving to break even something. But I'm not going to hold the trade if price have some kind of hesitation. You see how price react as a value gap, right? So if price is bullish and really, I mean, for midterm, it's gonna go straight and just don't give a fuck about this value gap. That's how it's gonna building momentum, getting price out of the mitigation block and sending price higher. That is what I want to see. And if price fail to deliver that, I'm gonna close the trade maybe with very low risk reward, but well, better be safe than sorry. So I hope you get what I'm trying to say right here, but I want to show you something else. Now, on quickly, I'm gonna show you something very interesting. Let's remove the value gap. You got the point, right? Now, from this high, be looking at this very carefully. If you want into this, you deserve to know that sometimes market is very predictable. From the high to the very low, it is 77 days. From the very low to retracement to the high, it is 63 days. Now, from the very high to the very low, it's quite obvious, right? What do you see? 70 fucking 7 days. Now, you want me to surprise you? From the very low to the very high. The very high is this candle, not this candle, but this candle. So what do we have? 63 days. You see, this is another way to see time. For me, this is another way to see time and price. Beautiful, isn't it? Exactly number, exactly the time. And I think, I don't know how many of you consider this is, but yeah, it is something beautiful, very, very beautiful. And if you watch until now, you deserve it. It is something not really happening every day, but this is how you can using time at your advantage to, I don't know, if you know exactly what's gonna happen, why you're gonna just be embarrassed in the whole 7 days. How beautiful is that? Same right here. Even this very small little retracement compared to the impulsive move, but you know that within 2 months it's gonna be bullish. So you're gonna focus only on the longing thing, and you're gonna be making money. Alright, so getting back to where we are now, continue from the very high to the from the very high right here, alright, to the very low. Where's the low? Right here, right here. Is this a low? No, this one is a low. What do we have? 98 days. What does that mean? That means something had changed. That means something is changing in the marketplace. Well, market is shifting into a new phase. it may be consolidating, it may be retracement of this whole move. I mean this whole move, and or repairing for a super dumping to the downside. But between everything, I consider it is shipping for retracement, because seeing how market behave and really just pushing to the downside for the really long time. Now what I consider is this low actually taken, and probably gonna go and touch this value gap on quickly, or even this other block right here. So if in that case I can hold price and target this one, then it's gonna be a very beautiful swing trade, but it's gonna take a lot of time, so I'm gonna be patient. So that is how when I measure the time like that, it's not a coincidence, it is something predictable. And when you see the number changing, that means something new is going to happen. And if market already having like going down for the whole year, then we're expecting something new. And for me, that is a retracement, and it's gonna be fast, and because it's not going to be slow, so you can buy and hold and get in. For me, it's gonna be quick. I just don't know if it's gonna swap my entry first. But what makes me feel comfortable longing is this one. This other block actually take count this low. So, and it actually getting very respected right here. It's and actually getting respecting by the price. So I feel really nice holding this trade. And well, it like anything, every trade, even the high probability trade, it can fail. That's the reason why I still calculate my risk, and I'm not going to go too big on this one, but definitely because it's gonna take longer to unfold. And as market right now is very quiet, I think it's gonna take some time. So obviously I'm gonna risk more than my day trading, my scalping, because I'm not going to wait months for 1% or 2%. But I'm not going to 100x or 10x. No, I'm not, because from my experiences, the bad trade, the trade that you fall in love with, usually is the one that hurt you the most. So I consider this one is a good trade. And on monthly, here's the interesting thing on monthly is I should delete everything so we can see more clearly. So on monthly we have a 7 days before the monthly is ending, and we have this low right here of this option. So we can see that price actually rejecting this one right here, right? So if the next 7 day price can climb back this low right here, because this level right here is crucial. If price now in the final days of the month and of the year, if price can close above this, I mean, it's gonna be beautiful. It's gonna engineering that price open right here, trade higher, rejecting this bullish candle but failed to make a new low, and then going back at the end of the month and close bullish above this low. That means the next month is gonna be bullish, and I'm not sure if it can break this high right here, but it's obviously gonna go deeper into this bullish candle. I'm not sure if you get what I mean, but that is how we using the monthly candle for swing trading. Alright, I think this car video is quite long already. I'm not sure if I know not every trader have the patience to finish this, but well, thank you for watching, and I see you on the next video.